Hello, John Mills, John Mills Residential Mortgages at South Bay Equity Lending. It's Friday, December 15th, and this is your weekly market update. Well, the news from the mortgage markets is good. Rates have been falling the last 4 weeks, and yesterday the Fed announced that they're holding steady on the federal funds rate, so the prime rate stays where it is. But the other part of that meeting that's come out is that the forecasts are that federal funds rate and the prime will be cut 3 times in 2024. So the markets are starting to move. With just the mortgage rates falling the last 4 weeks, across the country, there's already been a 19% increase in the number of mortgage refinance applications. So for those folks that have been sitting on the sideline waiting for the market to turn, the market's starting to turn. Mortgage interest rates are coming down. The Fed is signaling that they're going to start cutting rates in 2024. So I know a lot of folks have been sitting on the sidelines waiting for the market to turn. This is the time to act. I anticipate come February, post Super Bowl, it happens every year, that's when many more homes start to go on the market. You'll have more choices with more homes on the market, and we're already starting to see it. Looks like there's going to be more demand. We've already seen that 19% increase in refis. This is the time to get pre-approved, to be in position to act, because when you find a home you like, I think the demand's going to be greater, and when that happens, prices are going to start to go up. And it's better to secure it now before you start to see the bidding, the competition, and the prices to be pushed upward. So that's the prediction for 2024 is more activity and home prices going up, but also lower interest rates. So get pre-approved now. If you've been sitting on the fence as a home buyer, this will be the time to act. And then let's talk about refinances. So the rates are starting to come down. So the average 30-year fixed topped out at 7.8%. And right now, this week, the average 30-year fix is 7.07%. So, and anticipated to continue going down. So that's really good news. But during the past 2 years, a lot of folks have racked up some consumer debt. And those credit cards, the interest rate on those credit cards is over 20%. So there are ways to, whether it's refinancing the first and bringing all that debt together at a much lower interest rate. We'll run the numbers for you and you'll see all the options available to you. But also look at a 30-year second. I'm starting to get those as more lenders offer those, a 30-year second to take out that consumer debt and have it at a much lower rate and a reasonable monthly payment amortized over 30 years. Or doing a home equity line of credit, which is also an option, and the interest rates on that are lower, so much lower than consumer debt, than credit card debt. So a lot of good news in the mortgage market. We're ready for it. The rates topped out in July of 2023, and it's great to see everything starting to turn. So here we are, December 15th, heading into the holiday season. I hope everybody has a wonderful holiday season, lots of love, laughter, joy, and fun times. And we're all looking forward to 2024. Take care.